Hey folks, David Frost, mystrategicforecast.com, and you're looking at a chart of HPQ or Hewlett Packard, and the reason I have it up is because I want to show you guys a classic example of a trade setup or a nice chart pattern that is a good risk reward for a trade. So this is just a little bonus video for you. And right now you're looking at a weekly chart. And the reason I have the weekly chart up is because it depicts the pattern I'm looking at. Now this can be found on an intraday chart, a 10-minute, a 60-minute, a daily chart, a weekly, a monthly. You find the same patterns on all the time frames. But this one particular is the weekly chart setup, and here's what it is. And what you're looking for when you take a trade, this one happens to be on the short side, and I'm going to explain in a minute. But what you're looking for is a good risk reward where your downside, meaning downside loss potential, is very small in comparison to your upside potential. So that's what we have here, and let me explain what this is. Here you have a top of the chart. Okay, basically, we'll call it $38 just for argument's sake. It's a little higher. It's $38.25. All right, so $38.25. Here you had a big down week, and this was back in the middle of October, where the market was basically cascading downward, and then you reversed and you came up and you're challenging this this big down week, and the high of this week is 37.53. So what happened is you seem to be stalling out. See this little red candle here? You seem to be stalling out before you reach or breach this this high of the week of October 10th. Okay? So what you would do in this case is you would take a short trade and you can put your stop. Stops are very important because we want to minimize our loss if we're wrong, right? We can't be right every time. Sometimes we're going to be wrong. So we have to know where we're wrong and we have to know where to minimize the downside risk. In this case, the downside risk would be, there's two, okay? For more conservative traders, it would be a close above 37.53 on a weekly basis because this is a weekly chart. That means that by Friday afternoon at 4 o'clock, if you close above, or it looks like you're going to close above this level, you move out of the trade, lick your wounds, and move on. For a little bit more aggressive traders that like to give a little bit more wiggle room, you can always put your stop above the high here, which was 38.25. However, this pattern would really only play out as long as you stay inside this weekly top. And the weekly top, once again, is 37.53. So what you'd be looking for is taking a trade on the short side right now, and you'd be looking for conservatively 35 should be pretty good chart support. So you might be looking for 35, which isn't all that downside, and that's the reason I'm showing you this. I'm showing you this for the chart pattern. I didn't put this one out to the members because I don't know if the downside has enough meat on the bones to take the trade because you have a lot of chart support in here. But nevertheless, I wanted to show you from a chart pattern perspective what we're looking for to take trades, good risk-reward trades. Now, assuming that there's more downside here, you could be looking for 33, 34, and this isn't a long-term trade. This is like maybe a 1 to 5 day trade on the outside 5 days. So, if you're looking for 3, 4, 5% on the downside, that would be okay. But the whole concept of this video is to show you the type of chart setup you're looking for. You're looking for a big down move, an up move after that, and then you can't get above the high from the week of the big down move. And that's basically a classic chart pattern we look for when taking trades on the up or downside. On the upside, it would be the opposite, right? It would be a big up move. You consolidate inside this and then shoot higher. Okay, and let's see if we can even find one for you that looks a little better than that one. It would be, I can't find one. Never could find one under pressure. It's amazing how that works. You know what? Let's go to the daily chart real quick. Just bear with me. I'm not going to make this into a long video. Here you go. Now, let's say this stayed inside this green here. Okay, but since you closed below it, it didn't play out, but this would have went higher. Or, here you go. Up move, consolidate sideways, up move. Well, it's the opposite of what we just found on the weekly chart basis here, which is, okay, down move, you move up, you challenge the high, you can't get through the high, it should turn back down. So all in all, this was just basically a chart school lesson showing you what to look for, one of the things to look for, one of the patterns to look for when looking for a trade setup with a good risk reward in your favor. Hope that helps, folks. I'm David Frost, mystrategicforecast.com. Thanks for tuning in.